price is king, it's where we belong. Stay with the dream, don't lose your way. Right way's the fire that'll light the day. Keep it simple, let the moment arrive. 3-8 trap keeps the hope alive. Hold on tight till the signal's near. Right way's the trail, we're breaking through fear.
Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for August 1st, 2025. Well, we start off today with a very different attitude showing up here in the market. We had earnings yesterday afternoon on Apple that just failed to impress on Apple, and Amazon coming in with more of a bearish look to the market this morning. The earnings were good, but the guidance not so good. And we see a little bit of bear activity there. We also are seeming to suddenly realize that, well, wait a minute, it looks like the president was serious about this. And the market is reacting negatively to that. There was one major change. Mexico was given another grace period of 90 days because of the complexity of resolving the issues at the border. So that was done, but all those other tariffs looks like they're in place as of this morning. So let's take a look at what happened here overnight. Well, overnight, pretty rough for Asian markets. We saw Asian markets declining and led to the downside by a, well, substantial decline in South Korea. We had Australian markets lower by $80.80, 0.92%. Hong Kong fell by 265.52, 1.07%. South Korea falling 126.03, 3.88% lower. The Nikkei fell 270.22, 0.66 lower. We have India falling 203 points even, down 0.82%, and Shanghai lower by $13.26 or 0.37% on the day. So pretty rough in the Asian markets last night. Now, we have to remember that all of these markets have been running up, and several of them have just had recent record highs. So just like here in the U.S. market, a pullback would be expected because of those big stretches to the upside. But it is interesting that it's coming here almost as if the market didn't believe that these things were going to come to pass. Now, if we take a look at our European markets this morning, European markets also waking up to some pretty ugly selling. The DAX is down 371.41 or 1.54% this morning. FTSE is lower by 45.61, 0.5%. And if we take a look at the CAC, down 147.67 or 1.90%, feeling the pressure there as well. If we take a look at U.S. futures here this morning, well, no surprise here with everyone else showing bearishness. Dow futures this morning down 448 points. S&P 500 futures down 65.50, and NASDAQ futures a whopping reversal from yesterday, down 277 points. We saw yesterday in the NASDAQ with that big booming move in the morning popping up. Unfortunately, that big buy wave coming in on the Meta and Microsoft reports was not followed by market breadth to the upside, and we ended up whipsawing bearish engulfing candle. We'll look at that here in just a little bit. So pretty rough start to the morning. Now, if we take a look at other markets in here, if we take a look at the U.S. bonds, we've got the 2-year bonds coming in at 3.95%. 10-year bonds are coming in at 4.39%. And those 30-year bonds, 4.93% this morning. So we've got a little bit of increase going on in the bonds. At the moment, it doesn't seem to be having any kind of negative impact on the U.S. dollar. Right now, U.S. dollar continuing to rally up 12.5 cents here this morning, and still looking very, very good as the dollar continues to strengthen here. If we take a look at the impacts here to precious metals, well, we've got gold. Gold actually has been bouncing around here quite a bit since I've been up this morning, but at the moment, gold is down $1.80 an ounce, but you can see that's bouncing off of the low here from first thing this morning. If we take a look at silver going lower here once again this morning, down 20 cents at 36.51 an ounce. Gold right now is coming in at 33.46 an ounce. If we take a look at copper, now copper had a really rough day yesterday, pushing down, but then ended up bouncing back up. But this morning, we're not getting any kind of great response here in copper, but we are improving by a little over 4 cents here this morning. Platinum continuing to show bearishness this morning. Platinum falling $20.50 an ounce here this morning, and palladium declining $21.80 an ounce here this morning. If we take a look at crypto markets this morning, crypto markets bearish across the board and not improving here so far this morning. We've got Bitcoin this morning down $2,108 a coin, or 1.80%. Ether is falling 128 points, 3.42% lower, and I'm seeing bearishness across the board. Now, even though this is a pullback in here, there's really nothing bearish about that chart here in ETHA, so no particular worries there, but we are seeing that selling. If we take a look at oil markets here this morning, energy markets, we've got oil down at the moment 42.5 cents a barrel at 68.82 a barrel. So if we look at USO, we're pulling back here on those oil numbers, and if we take a look at our oil producers, kind of flat in there this morning. We've got Brent crude lower by 71.50 to 71.57 a barrel. Natural gas is also lower. It had a nice little pop yesterday, but right now only about half a cent lower here this morning. So keep an eye on that gas. Maybe we're finding a bottom in here. We'll see. Pretty rough there on UNG, the way that's been handling. We're back down here to major lows here in the market. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these index charts, and remember, we want to look at these index charts for what they are, not for what we want them to be. I'm feeling a little bit justified here this morning, continuing to repeat over and over and over, and I know a lot of you are probably saying, This guy is a one-track mind in here. I kept saying stay with the trend, but have a plan to protect yourself if the trend were to break, because I suspect we could get some big point moves. We're seeing that this morning, and we're seeing a follow through here this morning with a gap down and a break of a pretty important area of price support here in the market, or in the Dow. A nasty little reversal here, and unfortunately here the diamonds, they didn't have the chance to hit a new record high. We're up here with a topping pattern now that we're looking at the Dow. So be really careful here. If the sellers were to continue, I want you to notice through here, we have individual day support in here that could help. We've also got some pretty good gaps in here on that strong run to the upside right in here. And so there is the real possibility that we could push back to test this major support here in the chart. So that's significantly lower still. And we want to remember that we're so elevated, have been so elevated away from our moving averages, we could see a test of those moving averages here all at once, shaking this market pretty hard. So watch that carefully. Now, we could fail that 50-day moving average if we're going to come in here and test this area of price support. Would we do it in one fell swoop? I don't know. But obviously we're taking a lot of shine off of the market here this morning really fast. And unfortunately, here we go. It happens in the overnight hours, and folks get trapped into this. And that's why I have been cautioning over and over and over to be thoughtful about positions, be careful not to chase positions to the upside. And now we're seeing some of that coming into play here. Not that I am proud of the fact that we're selling off. That's not at all what I'm saying. I'm just saying it is the recognition of what the charts are that makes the difference, and not looking through the charts with rose-colored glasses and only seeing what you want to see. Now, if we take a look at our SPY pulling back here, we left a kind of a nasty bearish engulfing candle in there yesterday, but we did hold this support. Unfortunately, this morning we're gapping through that area of support. We're coming back into maybe this area of price support in the chart around the open, and we're also breaking this upside trend. Now, remember, anytime we push back, it's not the initial wave down that's usually the worrisome part. It's the scary part because people weren't expecting it. We push down, and what's going to be important is how we rally back to the upside. And the same in the diamonds. Now that we've made this push to the downside, when we push back up, how will we deal with these price resistance levels here in the chart on the push back up? Because that's where the real selling can occur if we create lower highs in the market. The SPY has got a ways to go here to really show much negativity. So if there's some hope here, we might catch some of these areas and then just get a pretty substantial bounce. And we know that's what the market has been doing a lot of. We can even get a bad earnings report and have the stock gap down and just reverse and come all the way back up as if it didn't even happen. So watch that carefully. If we were to fail through this area and push down into this area, I think that's really going to raise some significant worry here in the SPY, because we are so elevated away from our moving averages still. And a push back down into here would kind of suggest that, hey, that 50-day moving average could tug pretty heavily on the price of the SPY, and we could push back maybe even into this level of price support in the chart. Whoops, right through here, and that would be just below that 50-day moving average. So watch that carefully. Remember, it's the bounce back up. It's how we react back up that's going to be more telling than this initial sell-off here in the market. Now, our QQQ, bearish engulfing candle, breaking down here a little bit. This morning, it's holding up a little bit better than other markets, mostly because we were so overly extended in the Qs. We might hold on to this area of price support. So if we bounce right back up here, I don't think there's any harm in that chart if that's what they do. Now, it might be painful for those that have been chasing in here lately on this to see this, and we could see some additional selling, because remember what I've been suggesting is when this occurs, there's probably a lot of folks with their finger hovering over that sell button, and you could see the immediate emotional reaction that people could have this morning and just sell, 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 sell. So watch that carefully if that were to occur. We want to keep in mind here, we're also extremely extended away from our 50-day moving average, and that possibility, if we continue to fall and break some of these additional levels of price support in the QQQ, we could start engaging that pull from the 50-day moving average and have us pull down. And because we're so stretched here, even going below the 50 to this more major area price support could be a possibility, so watch that carefully. But if we bounce right back up in here, and certainly that's a possibility that we just shake it off and bounce back up like we've been doing, then maybe there's not even any harm coming in here to the Qs. And then our IWM breaking pretty hard here, and IWM has been suffering a bit anyway, just simply because we don't have any tech giants in there, and we're so centric into just the Mag 7 stocks that it just doesn't have the energy that the other indexes have, the benefit of those Mag 7 pushing the markets. So watching this carefully now, breaking some support in here, I have suggested that we would raise some pretty serious concern in the market if we break through this level. And we're breaking through a lot of those levels in the indexes here this morning, and we're doing it all at once. So people will be waking up to a little bit of pain, a little bit of shock this morning. So look for that emotional reaction here in the market. Now, if there's any good news in IWM on that situation, is this morning we're going to be testing right in here on our 200 and 500-day moving average, and it may show us how important it is that we continuously come back and test those areas of support if we were to able to hold this in IWM and then catch that bounce. Falling through there, of course, is going to raise additional concern in the market. Now, if we take a look at our VIX, obviously having a pretty rough day here on this pushback here this morning. So keep a close eye on this, that reversal occurring in here, raising some fear. But remember, it's never ever the first wave of that move up. It's if we hold a higher low someplace in here that really brings in selling. So watch that carefully as we approach these levels of resistance here this morning. And if the bulls have anything to say and we push this right back, no harm, no foul in the chart, and it's certainly possible. If we take a look at our T2122, our T2122 indicator in here, well, it's showing us that we had pushed down yesterday, and we're getting very, very close to this. A bullish reversal zone, this gap down this morning, could bring in those bulls to try to bounce back, because I'm going to guess, we haven't seen this for a long time, but I'm going to guess we're going to be pushing down into this bullish reversal zone. And like I say, we haven't been down here for some time. We've been so over hyped to the upside. So watch that carefully here. If we push down in there, we might catch that bullish reversal coming into the market. Now, if the bulls shake this off by the morning open, well, we've got a big upside opportunity for them now if they can shake this off. So keep an eye on that possibility. If we take a look at our T2108, T2108 continued to fall yesterday, and this is a little bit of a concern. We dropped below this significant area of price support here of 50% of the stocks holding above their 40-day moving average. This morning's gap down is likely going to be fairly serious here in the morning. Whether we bounce back off of that, that'll yet to be seen. We've got some price support in here around 40%. I'm guessing we could fall right through that first thing this morning, and we could even be down here testing this area around 30% of the stocks above their 40-day moving average. So we're really putting some heavy pressure here on the markets this morning. If we shake this off and the bulls come back, we'll just want to be watching these areas. If we break down through them, we'll want to be watching these areas on that bounce back, on that push back to the upside. Those areas could be coming into some resistance in the market. And then if we look at T2107, that T2107 also having a pretty rough day yesterday, but held up way better than T2108. And you can see in here that if I use that as a trend, we just pulled back into that trend area. We did give up, that 45% area here in the chart, but we've got some nice support here around 40%. So on this gap down this morning, I'm going to guess we're going to break right through that first thing here this morning. We could be down here testing in the 35 zone pretty easily this morning, so watch carefully there. That could be pretty interesting on the day, and then we'll look at these areas as resistance on that pushback up. Our T2101, the breadth of the market, now this is what I was talking about, that big gapping move yesterday just really wasn't followed by a lot of breadth. And then as the selling picked up, we actually saw breadth strengthening into the day toward that bearish side. Well, now we know that the bears are feeling the pinch here this morning, and we might actually see that breadth really start to pick up here on that bearish wave as the bears try to take over here in the market for a period of time. So watch that carefully here on market breadth. And remember, we're sliding out from under that blackout period on corporate buyback, so that could even help to maybe the bears won't get enough energy to really take over for long, and we get that nice bounce back in the market after this selling this morning. Let's take a look at our economic calendar here for today. And our economic calendar, well, we've got a rather busy morning here on that economic calendar. We're going to get the employment situation number here this morning. They are suggesting that the employment situation, non-farm payrolls will decline pretty substantially from a 147 to a 110. They're looking at the unemployment rate increasing to 4.2%, and they're suggesting that the private payrolls in here increase pretty substantially from 74,000 to 100,000. So kind of interesting data in here on that consensus estimate. We'll see how accurate this is. Remember how badly they estimated the GDP here. This could be interesting numbers here today and could be market moving if we miss either to the top or bottom side on these estimates. Manufacturing looking for a pretty substantial recovery in here from a negative 7,000 to up 1,000 employment. Participation rate increasing from 62.3 to 62.4. Average hourly earnings month over month is increasing to 0.3%. That's a good thing. And year over year staying flat. We're seeing average work week staying flat as well in that consensus. We're also going to get a PMI manufacturing number here this morning. PMI, according to consensus, is expected to slip from a 52.9, which shows growth in PMI, to a back into contraction on PMI. So watch that carefully here on the day. Now, I would say we saw a Chicago PMI number yesterday. They were expecting that to also decline, and it came in better than expected. So if that plays into these numbers here on that PMI, once again, remember, consensus estimates have been very, very bearish here overall and we've been seeing a lot of numbers coming in better. So watch that carefully in here. Could also be a market moving number if we miss to the upside on that PMI. ISM, they're expecting ISM to improve just a little bit from 49 to 49.5. So watch that carefully today. It is a market moving number. We've got construction spending, expecting that to improve from a negative 0.3 to a 0.1 in there. And then we've got consumer sentiment. They're suggesting that's going to stay flat in the year ahead. Inflation expectations staying flat as well. So quite a bit of data here this morning, along with that Baker Hughes rig count, which nobody's going to pay much attention to. Then if we take a look at our earnings calendar here for today, well, our earnings going to be a lot less enthusiasm here today on those earnings reports because, well, hey, it's Friday and we have no reports after the bell. These are the notables here for this morning. Pause the video, take a screenshot of that. You can kind of keep an eye on those, but notice in here that we really don't have any of those major market moving earnings reports in here to be thinking about today. So yeah, just keep an eye on those. Let's take a look at some stocks that could be setting up. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. Thank you everyone who does do that. I truly appreciate it. Shares these videos on your social media feed. That means an awful lot. I truly, truly appreciate it. Thank you, everyone, and I'll do my best to continue to answer those comments as they come in. Let's take a look at these stocks that could be setting up. Remember, everyone, these aren't recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market. Remember that we have that potential that a lot of these patterns could fail and fail pretty substantially. You might want to be taking a look at some of the things that might be more in the defensive nature of this market, good strong dividend payer kind of things. Here's an example of, we gap down on earnings and come all the way back. AT&T continuing to hang in there. Good strong dividend payer might be something to look at. If you take a look at TMUS, I'm going to go back to the daily here. TMUS putting in a nice bullish pattern here. Watch that carefully if that picks up here today for that upside move. You might look at some of the inverse ETFs. Take a look at something like SH on the, this is a one for one, not a highly leveraged ETF, but you can see in this downtrend we might be breaking this higher in here. If this holds at higher low, we could find some of those inverse ETFs. RWM might be something that you want to be paying attention to on the Russell in here. Breaking through to the upside once again, just a little rest or pullback sets up that opportunity in RWM. Take a look at DOG pushing up off of this bottom as well. That relentless bullishness kind of getting shaken here, so watch that closely. Some of the volatility is likely going to come up. You could take a look at the VIX or things like VXX, which is an ETN to allow traders to trade the VIX. Things like UVXY might be something to be paying attention to as we see this fear starting to come back up into the market. So watch some of those inverse or volatility plays that could give you some good opportunities, I think. Keep an eye on TLT, TBT, those kinds as this dollar continues to whip around. You can see this morning we're expecting a pretty substantial gap down here on TLT that was trying to break this upside trend. So take a look at TBT. TBT might push back up if we're going to see those bond prices start to rally again and the dollar weaken. We might see this come back around. So look for some plays like that. Look for some areas in the market where you might have some bearishness coming into play. Let's take a look at like Costco. Costco has been bouncing back up here right into this downtrend here in the chart. This is a pretty good area of price resistance in here, and the downtrend, I would watch things like this that have bounced back up into resistance as the possible short. So keep an eye on some things like that here in the market. Now, although I've focused here just a few minutes on the bearish side, things you can do to protect yourself, doesn't change the fact that there's a lot of bullish charts out there still looking very, very good. Take a look at Oracle. Although this is pulling back, there is nothing at all wrong with that chart. If the bulls bounce back, if the bulls shake off this initial reaction, we could have things like Oracle pushing right on through to the upside. I'd keep an eye on that. Keep an eye on some of these stocks that have been coming back up out of this downtrend. We've got things like MasterCard that had a good pop yesterday on earnings, pulling back, still settling into this nice pattern. Watch that carefully for that opportunity for that to push back up. Shopify continuing to hold up pretty well in here, worth keeping an eye on. Marvel, nice pop in here, now resting back. Watch along this trend. If we find a little bit of bullish action in here, we might just bounce this right on higher. So there are good charts out there to look at. There's no reason to be in full-on panic here in the market, at least not yet. We've got some pretty good setups here overall. Take a look at APP continuing to run in this upside trend. Things like AMD, although pulling back, still in a very bullish upside pattern. Nothing in there that suggests we're going to fall apart. So there are lots of good charts out there despite the pain that we're seeing this morning at the open. So try not to panic. Hopefully you've got that plan. You've been hedging yourself. You got a way to protect yourself, as I've been suggesting. By the way, if you don't, and if you don't know how to do that, what I would suggest is you could take a trial in Right Way Options and ask me those questions. Options were designed for the purposes, not for speculation, buying and selling. They were designed for the purposes of hedging and reducing risk in the market. And we talked about that yesterday in Right Way Options, and I'm happy to talk about it again and over and over and over till you understand the things that you can do to protect yourself in markets like this with options can ease that pressure dramatically. So if you have an interest, come on over for $7 for a full 30 days. Do my best to help you with that area of the market as well. So with that, everyone, running this video a little bit long, I want to wish you all a fantastic day. I want to wish you great results in your trading today. Thanks so much for participating and being a part of this channel. I truly appreciate it. And I'll see you right back here bright and early Monday morning. Take care, everyone.
Black and white candles, my stars in the dark. Price is my king, got that fire and spark. Right ways my ranch on the trader's trail. Trading with heart where the profits prevail.